All right, everyone. Today we're talking about Salesforce, ticker CRM, and why I believe this might actually be one of the most misunderstood opportunities in the market right now. As of February 19th, 2026, Salesforce is trading around $185 per share. That's down more than 40% from its 52-week high of $324.45. The market cap is about $174 billion. And after this big drawdown, the stock is now trading at roughly 15 to 16 times forward earnings and about 24.7 times trailing earnings. That valuation reset is important because this is not a company whose fundamentals collapsed. This sell-off has largely been driven by broader SaaS apocalypse fears and concerns about AI disrupting traditional software models. But when you actually look at the numbers, Salesforce remains fundamentally strong. The company just raised its full-year FY 2026 revenue guidance to between $41.45 and $41.55 billion. Free cash flow margins are still over 30%, which is extremely healthy for a software company at this scale. Institutions own over 80% of the stock, and in early 2026, they've reportedly been accumulating shares at roughly a 2-to-1 pace versus sellers. On top of that, the median analyst price target sits around $327. That implies over 70% upside from current levels. Most analysts rate the stock a strong buy or moderate buy. So the big question becomes, what is the market so afraid of? And the answer is AI. There's a narrative that AI can write code, build apps quickly, and potentially disrupt traditional SaaS companies like Salesforce. But here's my personal take. Yes, AI can generate code very fast. But anyone who has worked in software knows that writing code is the easy part. Making that code actually work reliably in production, integrating it with legacy systems, debugging edge cases, ensuring compliance, governance, uptime, and security, that takes enormous effort. Salesforce isn't just lines of code. It's a deeply integrated enterprise ecosystem that hundreds of thousands of companies rely on every single day. Even if you build a CRM product that technically resembles Salesforce, winning those enterprise customers would require tremendous marketing effort, years of trust building, global sales infrastructure, and compliance certifications. That moat is not something AI can just bypass. Large enterprises are deeply anchored to Salesforce. Their workflows, customer data, automations, reporting, and integrations are embedded in the platform. And Salesforce's Einstein Trust Layer ensures enterprise-grade data security, which is critical, especially for regulated industries. Now, let's talk about AI not as a threat, but as an opportunity. Salesforce's Agentforce and Data Cloud products reached nearly $1.4 billion in annual recurring revenue in late 2025. That's 114% year-over-year growth. That is not a company being disrupted. That's a company monetizing AI. Agentforce is introducing autonomous AI agents into enterprise workflows. Early results show 30 to 40% productivity gains in research and content creation use cases. That shifts Salesforce from being just a system of record to becoming a system of action. And here's another critical point: the enterprise data that Salesforce already owns. Salesforce sits on massive amounts of structured enterprise customer data. That gives it a powerful advantage in building better agentic AI systems. AI models are only as good as the data they operate on. And Salesforce controls the workflow layer and the data layer inside many organizations. They've also partnered with major model providers like OpenAI and Google. So instead of competing at the foundation model level, Salesforce is positioning itself as the orchestration hub where enterprise AI agents actually operate. Are there risks? Of course. There's the risk of seat compression, meaning if AI makes workers more productive, maybe fewer employees need licenses. That could impact traditional seat-based revenue. But Salesforce is already pivoting toward more consumption-based AI revenue models. And with free cash flow margins over 30%, they have plenty of flexibility to adapt. When I look at the current price, down over 40%, trading at around 15 to 16 times forward earnings, at what many describe as a 10-year low valuation on a price to sales basis. I see a high quality company with a deep moat, strong financials, institutional support, and real AI traction. To me, this feels more like a sentiment driven valuation reset than a fundamental breakdown. Personally, I think this is a good time to at least start building a position in Salesforce. Not all at once, but gradually. The risk reward looks attractive at these levels, especially if you're investing with a multi year horizon. This is not financial advice, just my perspective as someone analyzing the business and the broader AI landscape. Let me know in the comments. Do you think AI disrupts Salesforce? Or does it actually strengthen its moat? And if you found this analysis helpful, don't forget to like and subscribe for more deep dives into high quality tech stocks.